The market right now is slowing, obviously, for all the systemic pressures that are building up from Europe. But I think that there was up to the point in which these pressures began to rise, the market was generating a lot of interest among investors. Main reason for that, well, low rates, a very low opportunity cost for those investors. And at this point, these investors were looking for yield. The market really expanded really well during the first quarter after all the pressure dissipated in January with the advent of the LTRO. Right now, investors are starting to become a lot more cautious because the issue about Greece and its possible potential exit from the Eurozone is creating a lot of anxiety. I would say to a large degree, a lot of investors, non-traditional investors in high yield that had in their asset allocation plans an allocation for equity are now starting to look at high yield pretty much in that sense. Let's remember that high yield offers 65–70% of the return with 50% of the volatility in equity. So for a lot of investors that are looking at an alternative to fit that equity allocation, they are looking at high yield today as a way to replace that allocation. I think that investors are trying to calibrate the sort of returns that they want. Up to the first quarter of 2012, the deals that were coming were good quality deals. As these low rates are set to continue in the future, a lot of structures, low quality structures came to the market, and obviously investors that are looking for yield started taking whatever the market threw at them. With the pressures building up in Europe, obviously investors are questioning themselves as to whether they want to own low quality paper in their books. And as these pressures build, I would say there is a demand for higher yields and better structures. So I think that the market at this stage is in transition as dealers and companies are trying to look for a balance with investors' demands. I would say also in terms of the investor mix that today this market is participated by many types of investors, from dedicated investors to institutional investors that were not traditionally investing in this market because of the demands that they have on their liability-driven investments and requirements.